This is not owning Bitcoin directly, but this is somehow owning an investment that trades along the lines of Bitcoin. Explain how that works.
Right. So we're a registered investment company, ARK Invest. We can only own financial securities. GBTC is what the Bitcoin Investment Trust effectively liquidates into if a person after a one-year holding period does not want to continue to hold, if they want liquidity. So our funds own GBTC, which sells at a premium to the underlying Bitcoin Investment Trust.
Exactly what I was going to ask, because they track Bitcoin, but there's a premium there. Is that because they are, we would say in legal terms, alienable? You can actually, for example, you can inherit shares in that in a way you can't inherit Bitcoin.
Yes, I think the premium is because of the scarcity value. In my IRA, for example, I can't own anything. I can't get any exposure to crypto except through GBTC. No one can, and same with our funds, ARK-K and ARK-W. So we have bought the Bitcoin Investment Trust through GBTC. We tried to buy the underlying, but the New York Stock Exchange preferred a traded security, and so that's how we ended up with GBTC.
Which, Eric, takes us to regulation. I mean, people have been trying to set up ETFs in Bitcoin with the SEC, and the SEC said, no, thanks very much, take back your application. What's the issue there?
Well, the issue there, first of all, besides the issues with the Bitcoin market and fraud and all that, that was the initial denial of the Winklevoss twins. They had been in registration now for 4 years. That was in March. But then the whole race got revived when the CBOE announced that it was going to try and list Bitcoin futures pending CFTC approval. When that happened, you saw 3 new issuers jump in and say, hey, we're going to have a Bitcoin ETF that tracks futures, just like USO tracks oil futures. They thought, and I think they were hearing from the SEC, that if there was a futures market, they would be having more institutional liquidity. It would make it easier for market makers to arbitrage. And ultimately, what happens underneath the surface of an ETF and the arbitrage is highly necessary to avoid what happens in GBTC, which is this massive premium. That's why the majority of ETFs, actually all of them, trade very close to the NAV because arbitrage is possible. So when the Bitcoin futures list, which I estimate maybe early next year, maybe mid-2018, I think you'll see some of these ETFs approved very quickly afterwards.